Good morning, everyone, and welcome to our webinar today, Getting Ready for Tax Season. I know that many of you that have been clients of ours are just starting your businesses, and so this may be your first time actually filing taxes for your business. We wanted to make sure that you are prepared, you know what you need to do before the end of the year. So when it's time for your taxes to be filed, you are ready. Some of you may have also been looking to get certified as a minority business enterprise or women business enterprise or any of the other certifications that are available through the state of Ohio. And I know that they do require that you have your financial statements, so and as well as your tax return. So we want to make sure that you have what you need in order to move forward with your applications or if you're applying for any state funding. But again, welcome to our webinar. I am Sharon Francis. I'm business advisor for the Minority Business Assistance Center. And on behalf of our director, Jesse Mark, we want to welcome you as well as our esteemed panel of presenters who are going to be sharing with you from their own expertise as in the accounting and financial fields. And so we have with us today Tenesha Hartgrove. She is a lifelong student in the area of accounting and finance and has completed several degree programs in finance, accounting, and taxation. Professional experience has spanned several industries, including tax and accounting, real estate investing, information technology, and banking. She's the founder of Increase Financial Services. And through her experience as a tax accountant, working primarily with small business owners, she found that most entrepreneurs, while extremely knowledgeable and great in their area of expertise, lacked the knowledge of accounting to truly have a good understanding of the financial aspects of their business. It is her mission to bridge this gap. And then we also have with us Mary Ann McClure. Um, she has been involved with tax preparation and accounting services since 1976. She's the owner of MS Accounting and Taxes, Inc., which is based in Athens, Ohio. And for those of you who don't know, the Minority Business Assistance Center, has a satellite office at the Ohio University in Athens. And so we have clients that are in that area. And so we're so glad that she's able to join us today. Her business has been in operation since 1981. She has a status of it as an enrolled agent, which allows her to represent clients who are having issues with the IRS. Her business serves small businesses and nonprofits in the southeastern Ohio region, providing payroll, sales tax, and income tax preparation. So she also attended Ohio University for both her undergraduate and graduate work and has lived in Athens for most of her life. Our third panelist, who's going to lead us off today, is Jessica Johnson. She's a CPA. She is the founder and managing director of Accounting Solutions of Ohio, which is a Columbus-based accounting firm formed in 2011. Jessica has many years of accounting and finance experience, and her focus is on helping businesses, nonprofits, and individuals achieve a higher level of success by offering her resources. In her role, she manages the financials for corporations, small businesses, and nonprofits, and provides consulting and tax accounting. She's also a graduate of the Ohio State University. So, Jessica, I'm going to let you kick it off. And we're just, again, thankful to have all of you who are here today. And for those of you who are attending, if you would put your name and your business in the chat, if you would, so that we know who's in the house. And also, if you have any questions as our presenters are moving forward, you can place those questions in the chat because we will have time for them to address each of them. So, okay. So thank you. And Jessica, take it away.
All right. Well, thank you so much, Ms. Sharon, for the great introduction, and thank you guys for having us here today. I am grateful to be in the presence of other business owners. I think yesterday was Entrepreneur Day, so this is a great timing. If we want to today just make sure that we cover some of the bases. The season is ending, and so as the season is ending, we want to start thinking about planning for 22, but also planning for 23. And so, as Ms. Sharon mentioned, my name is Jessica Johnson. I am the CEO of Accounting Solutions of Ohio. She gave such a great overview of everything that we do. And we're just here to help. We're here to be a resource in the community and to just to be able to provide whatever financial and accounting support that business owners need. One of the things that we wanted to touch on today um, is the record keeping side of things. And so, just real brief, wanted to talk about the steps that you need to take in order to get your taxes completed. And so when you go to a provider to have your taxes done, um, the tax engagement is completely separate from the accounting engagement. And so the accounting side needs to be done before you can actually do the taxes. And what accounting is really preparing what is your financial statements, but it's really just a summary of your revenue and your expenses from a profit and loss standpoint. Also, the balance sheet is a summary of what you own, which is your assets, and what you owe, which is your liability, and what your business and what your equity and worth is for that company. And so in order to do that, you've got to have good record keeping. That's one of the number one things that needs to happen with having your business. And so in order to do that, just some hot topics. Keeping your business and personal separate is going to be one of your number one steps. So you want to have a separate bank account for the business, and you don't want to have personal expenses coming through. One, if you have an LLC, it looks like you're commingling funds, so I won't go into the legal side of things, but that may, if you ever got sued, that may get things a little muddy because there's no true separation of the business and personal if you're running your personal stuff through the business account. But also on the accounting side, it gets tough. If you go to Target, did you buy office supplies or did you buy toys for the kids? So you want to be able to have that business and personal separate so that it's very clear what is a business expense. But you also need to keep the receipt. So I use the example of Target again. If you just look at your bank statement only, you don't know the IRS, you get audited, or if you have an accountant doing the work, they don't know what you actually got. Again, did you get office supplies or did you get toys from Target? Because when I look at that on the bank statement, it's just a number and it doesn't say anything. So the receipts really give the true detail of what happened within that purchase, and it helps to support the business nature of that purchase. So you want to make sure you keep all the business receipts to confirm that deduction. Now that technology is bigger and greater, especially through the pandemic, it's gotten even better. There's lots of different apps and different ways that you can help to manage that. So you don't need to have the old school shoebox with all the receipts in it. There are ways, in QuickBooks, you can take pictures, there are scanners, different ways you can, now in the stores, you can just get your receipts into email. You could sort it within that email system. You shop on Amazon, it's within that Amazon. If you have the customer rewards, Best Buy, Target, all those things, those receipts stay within there. So there's different ways, and whatever way works best for you. There's no one way that's the right way, other than making sure that you have access to that information if you need it. Same thing for mileage. There's different ways to keep a mileage log, but you'll want to keep that mileage log because that's also going to be a deduction. And we'll talk about the deductions in another part of the session today and talk about the individual deductions. But keeping your records of where you went for that business purpose is going to definitely be important for your record keeping so that you can provide that to your tax preparer when tax time comes. And the theme here is just system, creating that system that works for you. QuickBooks is one of the tools that a lot of people use. There's also Wave apps. There's just so many apps and systems that can help you to be able to track and manage those records so that when you provide them to your tax preparer, they're in order. You also could use Excel, different spreadsheets, anything that gets to the end goal. The end goal is for us to be able to have a summary of your revenue and your expenses so that we can see the growth of the company. That's from a planning perspective, but then also for tax. When we prepare your taxes, we need a summary of your revenue. We need a summary of your expenses. How much did you spend in supplies? How much did you spend in office rent? How much did you spend in office utilities? And it needs to be broken out in that way. And the only way to really do that is to have that system in place. And I suggest that with that system, you keep track on a continuous basis. If you only do it at the end of the year, you didn't give yourself an opportunity to plan throughout the year. And so if you only do it at tax time, you aren't looking at it in December to see, hey, what do I need to do in December that could help with my taxes when April comes? If you're not doing it in January, February, you're not budgeting for your year to come. Looking at the year in the past, okay, I spent this way. Was that effective? How did my business do in this past year? And what goals can I set for this upcoming year so that I can increase my revenue, whatever your goals are. And so record keeping is going to be key. Once you have those records in order, again, you can do that planning, tax planning, forecasting for the business, forecasting for your product, whatever your goals are. It needs to start with having that solid foundation and keeping good records and having systems is there. And then once you're ready, then you'll be ready to get going with your taxes. And I'm going to hand it over to my associate, and she's going to talk about the taxes and deductions.
All right, Mary Ann?
Yes, I'm here, and I'm still not having any luck with my video, so I apologize. It seems my camera has decided not to work today.
No problem, no problem.
I can't get anything on the screen right now, so I'm ready to go.
Okay. And I'm going to place your presentation in the chat too, so that everyone can follow along.
Okay, thank you. And I'm glad that I already sent that to you because I don't think I could get that up on the screen right now. So my name is Mary Ann McClure. I'm the owner of MS Accounting and Taxes. I've been doing taxes for a long time, as you might have heard in the introduction that Sharon was kind enough to do. We work with all different kinds of small businesses here in Athens, Ohio. It's in a rural county, but we're in the city where a high university is. So we get a lot of variety, which is very interesting. A lot of nonprofits in addition to the for-profit businesses. And I just wanted to talk a little bit about when you're, when you're getting ready to, you have enough work to do that you're thinking about hiring people. It's important to think about whether you, number one, can afford them. Which is very key. And number two, if you've been doing your projections, hopefully you can see that. And number two, if you're going to hire someone on a temporary basis as needed, if they can work that in their schedule, or if you want someone that you can schedule their time and day and how many days on an ongoing basis. And the labels for that are contractor versus employee. And a lot of people use the word subcontractors and employees interchangeable, but it's really important to know the difference. Employees, you're responsible for their schedule. You're responsible for withholding some taxes for them and paying them in on a quarterly basis. A subcontractor would be someone who hopefully has their own business and who does the kind of work that they might do for you for other people as well. And they're covering all their own taxes and have their own what we call workers' compensation. The state of Ohio has laws in place that all employers or business owners must cover with workers' compensation insurance anyone working for them on their premises or at their location of work in case there's an injury. And if you hire someone who already has their own business, you want to make sure that they have their own workers' comp coverage. You need this regardless of who you hire. Your liability insurance that you hopefully have for your business is not set up to cover work-related injuries as well. It'd be a pretty unusual policy. You could check. I haven't found one over the years that would do that. And if you do have an injury on the job and you don't have workers' comp coverage, you could potentially end up paying medical bills for many years if it's a serious injury. So you want to be careful with that. So you also want to think about if you need someone that you want to keep working for you, then they would probably prefer to be an employee. So you can withhold some taxes and send a lot of that money in for them according to the filing requirements and laws, federal, state, local, school district. There's a whole list. And this is definitely an area that those of us that do this work, we strongly recommend that you seek help with this. If you do hire someone and you are withholding Social Security, Medicare, federal, state, city, and you don't pay that at all, or you don't pay it on time, the liabilities and penalties and interest are pretty serious. And this is one area the IRS does not forgive. It's what they're called trust fees when you withhold someone else's money, and then you're obligated to send it in. So you want to make sure that you take care of that properly or hire someone to take care of it for you. And I wanted to just talk about the money part of having an employee as well, because not only do you withhold some taxes for them, and any of you that have already had wage jobs, you know what these are. The employer has to match the Social Security and the Medicare, which is 7.65%. And if you're a for-profit business or a nonprofit that has 4 or more people all working at the same time, you're obligated to sign up and pay into the unemployment system. And for new businesses, that's 2.7%. So you can see we're already on our way. And once adding workers' comp, which varies with the risk involved, you could be at an additional 10 to 12% or more if it's a high risk job on top of the wages that you pay. So in the handout that I have, I did an example. If you hired somebody at $12 an hour, what that would look like over the year. And you'd be looking at $28,000 over the year. So you'd need to make sure that you build that in your budget. And that's a full-time person. And I know a lot of business owners who are starting out might start with part-time, but you want to make sure that you pay the person enough that they feel good about working for you and they'll stay. And if you need to increase their hours, they can go full-time if possible. So you want to make sure your business plan and projections that Jessica talked about a little bit, you want to make sure that you include when this might need to happen, or if you need temporary help, what those costs are, unless you plan to do it all on your own, in which case you don't need to worry about any of this. But hopefully your businesses will grow and you will need one or the other. So the other thing that I'll throw out, now that I've talked about contractors and employees a little bit, there's a lot of people when they have their own businesses, they want to be able to put themselves on wages so they actually can have their taxes withheld. The only way you can do this is if you take an extra legal step and you form a corporation, or if you already have a limited liability company, there are some tax steps you can take. A couple of forms you can fill out and sign. And I'm not advocating that you do this, so I don't have samples of this, but you can choose to be taxed first as a corporation And then you can stay that way, or you can also choose to be taxed as a subchapter S corporation. And this is basically describing part of the IRS code that allows you to take distributions as well as wages. And the distributions don't have Social Security tax on them, so it's pretty tempting. A lot of people want to just take distributions, but IRS watches this all the time. And they expect someone who has a corporation or a subchapter S corporation that's providing services to their company and is making enough money to pay themselves wages and do the withholding and pay into the Social Security and Medicare system. And if you make that choice, you're locked in for 5 years. So it's not a spur of the moment choice that anyone should make. And it's something that you want to talk to a tax advisor about. If you're a sole proprietor in a limited liability company, you're probably fine for a while. If your business starts to grow, you might want to consider this, but I think it'd be a little bit down the line. One of the other handouts that Sharon will send to you, I think at the end, is the form SSH. It's an IRS form, and it runs through a lot of questions that someone needs to ask themselves, and or if someone wants to fill it out and have the IRS make a ruling. What makes the difference between a contractor and an employee? And most of it has to do with control. You as the business owner, if you control that person's schedule, what days they come, what time they come, the work that they do, the tools that they use, you will be considered in control, and that person likely will be considered an employee. So you want to be careful with this. It's something that gets watched. There's end of the year forms for contractors, the 1099 forms, and the end of the year form for employees, W-2s, along with all the quarterly payroll tax forms. So if you want to do this, make sure you talk to someone before you do it, so you know where the risks are and what the obligations are, all the filing deadlines that you have to meet, and the paperwork, and of course that you can afford to do it. I think that's it.
Fantastic. Thank you both, Mary Ann and Jessica, for that intro with regard to what you as a business owner have to take into consideration as far as if you are going to be filing, definitely if you have employees or you have contractors. I know a lot of people, when they get started, they're afraid to make that step of hiring that first employee because of all of the requirements that go along with that, and obligations, tax obligations, workers' comp, and things like that, which is one of the reasons that you might want to reach out to a professional to help you as far as setting up your financials, setting up your QuickBooks, or if you have internal bookkeeping systems, and certainly filing your taxes, because you can make a mistake in filing your taxes that can cost you down the road, or not filing your taxes. For example, if you're looking to obtain certification or apply for any of the loan funding that is available. For those of you who were on the Show Me the Money webinar that we had a couple of weeks ago with the various state loans, they're looking for you to have those tax returns and those and your financials. And they do have to tell a story. It does have to show that your business is viable in operation, and that you are current on any obligations as far as taxes, because if you are behind, you will not be able to get your certifications. And so it's important to include some type of accounting or bookkeeping professional on your team. So you'll be hearing more about it, but we're going to turn it over to Tenesha. And she is going to take us further. And then when she's done, we will entertain any questions. But if you have questions, even as our presenters are moving forward, feel free to put them in the chat. So we'll be ready to respond. Okay, Tenesha, thank you.
Hello, my name is Tenesha Hartgrove, and I am the owner of Increased Financial Services. We just recently moved to an office in Hilliard, went from virtual to a physical office space. and I do bookkeeping and tax preparation, among other things, for individuals and small business owners. I work with a lot of small business owners, and this time of year, they have a lot of questions about getting ready for tax season. I wanted to talk a little bit about the documents that you'll need so that you can start gathering those and having those ready when you go to prepare your taxes. For business owners, the most important documents that you're going to need are the financial statements that Jessica talked about first. And so that's going to be a profit and loss or income statement and a balance sheet. Those two documents are, that's imperative when preparing your taxes. And it's helpful as a business owner. You want to have those things just so that you know how you're doing throughout the year and whether you're actually making money. But those are the main things that you'll need. So when you sit down and prepare your taxes yourself, or if you have someone else do them, they don't necessarily need each individual line item that you spent money on, but they will want the summary total, and that's what the profit and loss, also referred to as an income statement, is. And then you'll also need a balance sheet. And so just depending on the type of your business formation, the balance sheet may not be required for your tax return, but it's helpful for a number of reasons. So with the income statement, that shows your profit and loss and how much money the business brought in versus all your expenses. The balance sheet is going to show changes in things like if your business purchased assets. So if you bought some equipment for the business, that should be reflected on your balance sheet. If you did, if you contributed capital to the business, then that will be reflected on your balance sheet. And this is important. So another question that comes up is, are my business taxes separate from my personal? So if you are a single member LLC or a sole proprietor, your business taxes are included. They're a part of your tax return, and they're reported on the Schedule C. Okay, so the income itself is separated out for reporting purposes, but it's all flows through, it's all on the same tax return. So it'll be a part of that full package. If you have made an S Corp election, so an election to be taxed as an S corporation, or a C corporation, those Mary Ann referred to those, or if you have partners. If you have partners, it's a partnership. And all of those have a separate tax return. So partnership, S Corp, and C corporations, those have a separate tax return. And then from that tax return, it generates what's called a K1. That K1, or I'm sorry, the S Corp and the partnership will generate a K1. And what the K1 is kind of the equivalent of a W-2 for the business. What it does is it shows each person's, each owner's respective amount of profit and loss or other deductions from that business. And you use that information to prepare your personal. So I've had instances where people who are, they're new in business and, they've done their personal because they were trying to hurry up and get a refund. And then, 2 months later, they're like, hey, I need some help. I need to do my business return. I already did my personal. Well, if you have a business, you cannot do your personal before doing the business return. C corporation is the only one where you might be able to do that. But in most cases, most business owners, they're either single member LLC, S Corp, or partnership, or smaller businesses anyway. And in that case, you want to make sure that the business part is done before you do the personal. And a lot of times, ideally, you kind of want to do them, together. Because I always find that there are things that, can impact the other. So there might have been something, that you may have, included with your personal records that really goes on the business, or there also could be tax planning opportunities. So, the potential for contributing additional money to retirement, and different things that you can do. However, the amount that you can do and the ability to contribute on the business side is impacted by certain things that you may have done or not done on the personal side. So, you do want to try and do it together, or at the very least, make sure that the business part's taken care of before you do the personal. But it's helpful to have the same person kind of look at both sides of it. So that's some of the biggest things. The other questions that you get, especially for people who are newer, is how do I pay tax, and how do I pay my share of taxes on it? And it's business owners, you'll typically make quarterly estimated payments. If it's your first year in business, those quarterly estimated payments can be based on what you project that you're going to make, what you expect that you might make over the year. You may or may not know that. They can also be estimated based on whatever your income was from the prior year to figure out the minimum that you can pay in without having a penalty. So for 2022, we are reaching the end of the year. So if you haven't already made estimated payments, there is the last estimated deadline is January 15th. So fourth quarter payments will be due by then. And then otherwise, your taxes will be due on April 15th. If you hadn't paid in quarterlies and it's determined that you should have, there could potentially be an underpayment penalty if enough hasn't been paid in over the year. And then the other option is if you're an S Corp, you can do W-2 wages. And with that, even if you did it through wages, payroll contribution in December, it would be okay. So that's typically with business owners, how you pay your taxes. And if you didn't do it last year, you want to make sure that whenever you prepare your taxes for 2022, that is a question that you ask, or, and find out how much do I need to pay in quarterly, for going forward. And if you expect your situation to be different. So if you're expecting 2023 to be very different than it was for 2022, make sure that you take those things into consideration or bring that up to whoever you're working with on your taxes so that they can adjust those quarterly payments accordingly. So some of the other things that you'll need when you go to prepare your taxes. So I mentioned the financial statements. You'll also need like any tax document. So you're going to want to have your personal stuff too. Like we know W-2s, 1099s. If you one I find people miss often is HSA this is SA 1099. It is generated. So if you have a healthcare spending account, and you use money from it, even though you use it for medical expenses, then the medical expenses, it's not taxable. However, you have to tell the IRS that that's what you did with the money. So with that form, and a lot of I think another reason it's missed is because a lot of times they send it out electronically. So they might send an email and say you have tax forms ready to download. And if you, disregard it, then some people don't even realize that they're missing something. But that's one where I commonly see, you get a letter in the spring that says, hey, you have some additional income. So that's one that's missed quite often is the HSA SA 1099. But any of those tax documents you'll want to have. If you have rental properties, if you purchased or sold a rental property, you're going to want to have that information. You'll need that closing statement from when you purchased the property and or from when you sold it. There are closing costs that might be deductible, and then you'll also have to figure out your gain and loss on that property. And then also with regards to that, actually, even if it's not rental property, any property that you sold, if you sold a home, a lot of times they will, the title company will issue a 1099-S. That's also another one that's commonly missed because they will usually give it to you shortly after closing. They don't tend to send those out in January. So like when you're normally getting all of your tax forms, that's not when they will send out a 1099-S. They'll typically generate it. If you close on August 8th, they'll include a 1099-S with your closing documents. And, so the gain could be, it could be non-taxable. So if you sold your primary residence, but you lived there for 10 years and the gain was less than $250,000, it may not be taxable. However, you still have to report it, because you have to tell the IRS that, yes, I sold it, but yes, I did live there, and this is what I paid for it. So there are things like that where you get a document, and don't think that just because you think it's not taxable or taxes were taken out that you don't have to report it. You do. Another one, 1099-Rs, I see often where people take money out of a retirement account, and then they'll have taxes withheld, and they think that that means that the taxes were paid. The taxes were not paid. They took some money and kind of estimated, they put it towards what the taxes might be, but you still have to report it on the tax return to figure out exactly what the taxes are. So even if taxes were taken out, you still want to make sure that you provide that 1099-R, that information, and include that on your tax return for filing. So those are a lot of the documents. There's many more this year. You may start receiving or seeing 1099s for, like, if you receive payments through like Cash App or Venmo, Zelle, some of those things that the like peer-to-peer payment apps, they have a new requirement this year where it's supposed to be only for merchants. Like, you can mark the transaction, whether it's for a item or for a merchant, as opposed to it being personal. But that's not to say that there won't be mistakes made. And just because you get one, it doesn't necessarily mean that it's income, but you do have to say, and say what it is. So if it's self-employment income, it is going to be included. You want to include it as your self-employment income. If it wasn't self-employment income, but you got one anyway, you'll want to make sure that you somehow address it and indicate that that's not what it was, so that you're not taxed on it that way. So it is something where, if you get those, you want to make sure that you're talking to somebody. And if you get one and you don't think that you're self-employed because maybe you were selling stuff on eBay or Facebook Marketplace, and you might not consider yourself employed, but it could be that the IRS might consider you self-employed, just depending on the nature of what you're doing. So just something to keep in mind. Then I also wanted to just touch on the other question that you get a lot is, what's deductible? What can I deduct, or how much of XYZ can I deduct for my business expenses? Or I just want to deduct the average. Well, you can't just deduct like a random number. Your deductions for your business, you can deduct any expense that was reasonable and necessary. That's a pretty broad definition, but generally if you use that thing specifically for your business, it can be deductible. Some of the things that can be kind of questionable that I get, sometimes I have people who are asking about clothing. So clothing typically is not deductible, is not a deductible business expense. Anything or things where, like, you can wear it to work, but you could also wear it outside of work. That doesn't make it a tax deduction because you bought a suit to wear to work. Uniforms can be deductible. So, maybe instead of just buying regular clothes, have a uniform, make uniforms, and, kind of turn your wardrobe. You're promoting your brand. So that's one way that I'll tell my clients something that they can do to try and, get some of those deductions. Meals, one thing there are a lot of things that are going to be different for 2022 because they gave us a lot of, there were a lot of like other benefits that they had given out or allowed due to the pandemic, but like meals is one. For 2021, meals were 100% deductible prior to that, and now going back to it, meals will only be 50% deductible. Entertainment is not deductible. So if you do something that has a meal component and entertainment, you have to make sure you separate those charges, because the meal component is 50% deductible. The entertainment is not, but then anything, you know, that you do, that you spend for your business can be deductible. Some of the things that then also there are things that, you know, where you have part business, part personal. So for example, home office deduction. So, you know, there's a calculation as to part of that being deductible. And so just want to make sure you go over that with your whoever's helping you with your taxes. So a couple of questions. I see someone asked, are there any benefits to paying quarterly? So the benefit to paying quarterly is that you don't get penalized. So you are actually required to pay quarterly, but the amount of those, so the IRS, they want their money as you earn it. And as you earn it, for self-employed people, because there's no withholding, the quarterly payments are how you do that. And so just kind of based on how much you've earned is how much they expect you to have paid in quarterly. So paying quarterly, you will have, you will avoid penalties, basically. So it's a requirement. And then I see a question, how do you get clients to keep good records? Jessica, I don't know if you want to touch on that, but I think I would say her first comment as far as keeping that business separate from personal, it's a struggle that I'm sure we all have, and Mary Ann too, is trying to get our clients to keep good records, but it really, really helps having separate bank accounts, having a business bank account versus your personal, and trying to get them to stick with that. But, you know, it's the constant struggle.
Absolutely. Absolutely. Jessica, did you want to chime in on that? We also had another question as well.
Yeah, I'll say just to that point, I agree. It is a struggle, but honestly, it's not our responsibility to get the client to keep the good records. It is the client's responsibility to keep good records for their own business. And so, you know, we went into this thing, we started a business, we said we want to be a business owner. These are the things we got to do. And so keeping good records, you're not keeping good records for me. Yes, it does help. Yes, it helps with filing the taxes. But at the end of the day, it's so that you can apply for these loans. It's so that you can, when random things happen like the PPP, you know, all those things, so you could do that. So you can plan for your businesses, so you can file your taxes. It is for you as a business owner. It is your responsibility to keep good records, and that is going to help you to be able to grow your business. And so that alone should be incentive enough for any business. And I know it's hard. Honestly, for my receipts, I keep my records in QuickBooks, but for my receipts, I try to get emails where, you know, when I can, and I have a folder, that's where I keep them. And then I have a paper folder. So it is kind of like the shoebox. I have a paper where I go, but that's where I know, you know, my records are in QuickBooks, but if I need to provide that support, it's in that folder. And then we can go to the next question.
Perfect, perfect. Thank you. Let's see, Muhammad asked, when can I select an S Corp for my LLC? Is there a time frame as to when they can make that election?
You can make it, I mean, you have the option whenever you choose to. Now, that doesn't make it a smart thing to do. There are certain requirements that come along with becoming an S Corp, and then also the benefits. The benefits can vary. So whether or not it's advantageous, you know, it is something that you really need to look at. And it's not cut and dry. It's not, once I tend to look at it when my client's net business income is closer to 6 figures, closer to at least 100,000. There are cases where it might make sense earlier, and there might be cases where it doesn't make sense at that time. So it's not there. I guess there are time constraints, whereas like for a timely filed election, you do it within 3 months of the year of the start of the year in which you want to make that election. But then they also have ways of doing late elections. So, up to 2 or 3 years later, you can still make the election. However, it's something where you really want to look and weigh the pros and cons, because there are more requirements and things like that come along with becoming an S Corp.
That includes putting yourself on payroll. So you do want to be doing some planning for it, especially if you don't have payroll yet. It involves setting up quite a bit.
Great. Fantastic. Okay. What are the pros and cons? Okay, and I know that this is a deep question. What are the pros and cons of switching from an LLC to an S Corp? If someone wants to just kind of give them a little answer to this, because I know that you need to be talking to a professional before you make that decision. Go ahead.
Individual. It's pretty individual. And I think that really is something somebody should take up with someone who's helping them with their taxes, an accountant, because there are so many factors involved.
Yeah,
Okay.
I agree. I think, if you were to identify a pro, it's the savings, but you only save if it's a right election for you. And so everyone will not save. And then the con is that there is additional work and responsibilities for making that election.
And also even filing with the state of Ohio. There are requirements that they have under those CAT taxes that as an LLC you don't have to deal with. So, just a number of different things. Let's see, I'm trying to see. If a client is making $200,000 or less, should they claim it before they file their taxes or claim it on a W-4? So I assume she's talking about doing an estimated payment or waiting and just filing it on I'm not sure.
Yeah, I'm not too sure about the question. Oh.
Okay. Child tax credit?
So I think it also kind of depends on the situation too, because if you have 2 wage earners and one is making 200,000, it depends on what the other person's making too. So the and just to back up a little bit, the W-4 form, that's the form that you give to your employer to tell them how much to take out of your income. And so that's how, at the end of the year, you either get a refund or you owe if they didn't take out enough. And so on the W-4 form now, it's a lot different than it used to be. And it'll ask you about how many dependents you have. And if you have a dependent and you put down you put that, then it'll assume that you're going to get the child tax credit, and it will withhold a little bit less from your pay, assuming you're going to get that credit. But I mean, it can vary because there's a number of factors that can come into play. So if they're married, the income of the other spouse can have an impact. If they're not married, and let's say that, 1 year, one parent claims the child, another year, the other parent claims the child, that can have an impact. So it kind of varies on the individual situation. On the conservative side, they can not put it. So, and then they just, if they don't put it on the W-4, then when they file their tax return, if they get the credit, then that's a bonus. They get it back as a refund. But if they put it on the W-4 and then there's not enough withheld from their pay, then when they file their taxes, they might owe. So, that's kind of the gist of what happens there. And so generally, I would say it kind of depends on some other factors, but the more conservative way to go is to not put it on a W-4 and then they get the credit when they file.
Fantastic. Well, listen, this information, hopefully those that are in the chat are taking this all in. And I think that probably, if anything, you recognize the need for having some type of accountant or bookkeeper on your team. If you're running a business, you're going to be making money, you're going to be spending money, you're going to be filing taxes, and particularly if you're going to have employees, you are going to need professional services. Even if you're doing it yourself, even if you do have QuickBooks. One of the things that I'm finding in a lot of my consultations that even if you're putting the information in, if you don't know how to interpret or to generate the necessary reports or even understand what the reports are telling you, you need professional assistance. So, and all of these panelists, I do appreciate them being on the call today because I did want to introduce them to you. And if you are looking for someone to review your tax situation or your financial record keeping, I encourage you to reach out to these ladies. We're definitely going to put their contact information up on the screen for you to take advantage. This recording will be available as well to you. And then, of course, here at the MBAC, we provide technical assistance for you as a business owner, and also access to these necessary resources. You might even need to reach out to legal counsel with how to structure your business, depending on the type of services that you're going to provide, or if you're dealing with, products maybe that require patents, or you're having a partnership, or you're doing joint ventures. These are, different kind of situations that businesses may often face that you as a business owner can't handle it. And to recognize that sometimes this investment, even in accounting services, is just that. It's not an expense. It is an investment. First of all, it's going to save you the headache of trying to figure everything out yourself. And also hopefully help you avoid getting into any kind of tax trouble where you have to call Mary Ann to intercede on your behalf with the IRS. I've had folks that have been penalized heavily for missing tax deadlines, for filing taxes improperly, using the wrong forms, so you can avoid all of that by talking to a business, a tax or accounting professional. So we encourage you to do that. One question that I did want to, I know that you mentioned about filing 1099s, or if you have contractors rather than employees. Can you talk about the filing requirements for contractors, that if you're going to be using someone as a contractor, when do those 1099s need to be filed, and just kind of talk that through if someone would address that for me?
I can do that. First of all, I don't think I mentioned that you should have the person you're hiring as a contractor fill out the form W-9, which basically name, address, social security number, or business name and federal ID number that they sign. They're attesting to the fact that that's correct. You want to have that on file before you pay them. And then the 1099 is where you report what you've paid them for the calendar year. It's due out by January 31st, which is the same deadline for your W-2s and the payroll taxes. IRS no longer gives us till February or March for any of those. So you want to be prepared to have those done.
Great.
I also want to jump in just for a second. You mentioned the CAT tax, the commercial activities tax. That actually applies to all businesses once their gross is 150,000. If their gross is over $1 million, then they have to file quarterly. If it's in between there, they only have to file once a year.
Thank you. Thank you. Thank you for that. All right. And then for those of you who have nonprofits, there are also filing requirements for that. If someone just wants to just speak briefly in that regard.
Talking about filing the 990 annual form. I just finished a bunch that were on extension. That one. Yeah, it's a little more complicated form. If you have less than 50,000 in income, you can file an electronic postcard. But you still need to register with and file with the Ohio Attorney General's Charitable Law Section. It's kind of a mouthful, but they expect an annual filing as well. And again, depending on income, You'll have a fee to pay. If your income's low enough as a nonprofit, then there's no fees. But as the income goes up, it goes up to as much as $200 a year, which is not too bad. The 990 gets filed with the IRS. If you truly are a nonprofit, there is no income tax to pay, but they do insist that you file annually. And if you miss 3 years, you can lose your nonprofit status. And getting reinstated is not an easy process.
Great, great. Thank you for
I
that.
I would just add to that, with the 990, there's just so many layers to it with the nonprofit.
Yes.
So even if you are a 990 in, the postcard filer have under the $50,000 in annual revenues, if you anticipate in the next 1 to 3 years that you're going to go over that amount, I would start seeking guidance early, because there's some things that you can do that can put your status at risk, including the volume of funding, the type of funding, if you're getting overfunded in certain areas, if you're not going, based on the mission that you provided when you file your 1023 application. So there's a lot of layers to the nonprofit and the 990.
Okay.
Absolutely.
Absolutely. Thank you for that. And then depending on the type of business that you have, those filing deadlines are very important. And I know that people can file extensions, but you need to be aware of the deadline, because you have to file the extension before that deadline. Am I correct? Anyone want to
Yeah,
speak to that?
I would say one thing that's been a little confusing is the S Corp and partnership deadline, because it just changed within the last few years to where that deadline is now March 15th. And so if you have a partnership or S Corp, that deadline is March 15th. It's not April 15th. And so if you miss that, then you run the risk of those penalties for not filing on time. And so basically knowing knowing the business status. I think sometimes when you get your EIN number, you tell the IRS what your business structure is. That letter is the SS4 letter that they give you when you get that EIN number. It will tell you what form you should be filing and when the deadline is. Take a look at that letter if you haven't, especially if you're a new business, and then also provide that to your tax preparer. You want to be paying that attention, and knowing now is going to help.
Great, great. Well, everybody, if there are no other questions, again, I want to thank all of our presenters for sharing with us today. And I'm going to put their contact information up here in the screen in just a second here. Let's get it up here so everybody can see. There we go, finally. And we will have a recording of this session that'll be emailed to you. Again, I want to thank Jessica, Mary Ann, and Tenesha for being on our webinar today and sharing their information. Here's their contact emails. Feel free to reach out to them if you need professional services. And again, we are here to serve you as the Minority Business Assistance Center. Again, our director, Jesse Mark, myself, our certification specialists, we are here to help you make sure that you can succeed in business. So again, glad to be a part of your team. And thank you again, everybody. Y'all have a great rest of the